Okay, let's take a look at this round. Again, I'll try to get through it a little bit quicker, but answer any questions that anybody might have. If there's anything exciting that happened. Who do you think won? Well, I got to vote for Team Erie. This was fun because we really saw the difference, I think, between one team that's obviously gone big. They have the biggest sales, not quite the biggest sales, but pretty close. And then another team that has sales, which has sales significantly less, and yet made more profit, showing that you can approach this in a couple different ways, right? You can approach this game in a couple different ways, and the tactics then, I mean, to me the strategies are kind of obvious. They should be for those two teams at this point in time, but the tactics then that you employ become really, really important in how you fine-tune that in order to really take advantage, right, to really score good points. So we see, for example, the ROE, look at Team Erie, 37.7% ROE. God, if I could invest in a company that could consistently return 37.7, I would take 19.1 in a heartbeat. Okay, I would take out a mortgage on my house, and if I could consistently get that kind of a return, I mean, I would gladly take some risk and invest in something like that. Even Andrews at 15.6 is really good. So what's the formula for ROE? ROE is equal to net income divided by equity. Yep. Remember, return on anything is net income divided by whatever the anything is. Don't be surprised if one of your questions has something to do with that. And look at the sales. Yeah, Ferris had the biggest sales, and yet only managed to produce $8.8 million in profits, while Erie had a little better than half their sales, and yet somehow managed to squeeze out $26.3 million in profits, even ahead of Digby, which had $208 million in sales. So that's pretty impressive, and you'll see that they were able to do that when you look at the really the combination of the SG&A and the contribution margin, right? You look at that combination, and what's that, about 44%? If you deduct the SG&A from the contribution margin, they're sitting there at about 44%. That's pretty impressive. Okay, that's pretty impressive. To get 52% after 5 rounds is pretty impressive. That took some pretty good planning there, pretty good tactics, fairly decent pursuit of strategy. You don't often hear me throwing out compliments like that when it comes to this, so it's pretty good. Digby at 47.5, really impressive. Look at all the teams, right? Ferris is the only team really, when it comes to contribution margin, that isn't doing all that well. So see the stock prices. They've got Digby up there. Erie passed Andrews. Again, impressive compliments to you guys as a class. Usually I've said that you'll get your butts kicked, they usually say, in the practice rounds by the computer teams, but you usually come back in the competitive rounds and kick butt on them. But here really the computer teams have taken a back seat to you guys here even in the practice rounds. So that's pretty impressive. Again, compliments. Gosh, it almost pains me to say that. It almost pains me to give you guys compliments. It's so out of character for me. I'll get over it. Looks like there's probably some action here in the stock market thing, but we'll see that when we get down below in the cash flow. Maybe a little action here in the bond market summary. I would say Team Andrews almost looks like, I wonder if they issued even some more debt. Crazy. And they got all kinds of cash on hand. Income, depreciation. Look at the big differences there. Although I was kind of surprised, when I looked at Team Erie and a relatively small company, but they've got a lot of depreciation here. I wouldn't have thought that their fixed assets, I mean, just looking up above, I wouldn't have thought their fixed assets would be that big, that they'd have that much depreciation. Um, so I was a little bit surprised that their depreciation was as high as it is. Everybody's kind of similar except Chester. Chester's obviously become a smaller company. Nothing up there that's particularly, what do we see in inventory? Yeah, nothing special. Looks like Ferris had a build-in inventory maybe. Dividends, Andrews did pay a dividend. I got to take that into consideration. Well, not really, but I asked a question about Andrews paying a dividend. I'll have to make sure that I talk about that a little bit when I show you the assignment. Erie paid a huge dividend. Okay. And that might have had a big impact on their ROE. Now, let me rephrase that. That did have an impact, right, on their ROE. Sales of common stocks. No, I was wrong. Nobody sold any common stock. Oh, I said bonds, though. Cash from long-term debt issued. Yeah, I did. Team Andrews did issue some debt, as did Team Ferris. Again, kind of surprisingly, because they both have plenty of cash. That must just be something, bless you, something built into their program. We see some debt being retired. Chester did have an emergency loan. Lots of cash. Okay. Kudos to Erie. I would say that's pretty good cash management there. You do want to have a positive cash balance so you don't get emergency loan. But when you're sitting on 40, we got, 3 teams with 40 and Digby with 25 million in cash. That's a lot of cash to have around. And when you do like Ferris and Andrews, I'll pick on them since they're the computer teams. I mean, they're issuing debt, which is an expensive process. Okay, I mean, you're going to pay interest on that, number one, but there's also some upfront cost to issuing debt. Float, I think is what we called it in finance class, right? There's a float cost that you got when you're issuing debt that adds some cost to that. So it's a fairly expensive process that they're going through to get cash, which they already have plenty of. So, I would call that really poor cash management there and very expensive. Okay, expenses that are sometimes hard with the amount of information that we have, kind of hard to ferret out with the amount of information that we have. But if you were actually running this company, things like that would kind of drive me crazy, I guess, to have that kind of cash. Okay, I'd rather have access to a short-term line of credit if it were in my, if I was running the company. If you had access to a short-term line of credit, which is very common. Boom, you just advance money if and when you need it, and it really doesn't cost you anything if you don't need it. Sometimes there's a little upfront cost for setting those up, but not much. So, and you guys, by the way, have access to all kinds of short-term credit, if I'm not mistaken. So, and short-term money is usually a little cheaper than long-term money. At least in this game, it is. So, and size of the companies, Chester has become a really small company. You're getting down to total equity of 36. But you see also the advantage that Erie had. Okay, was 70 million in equity. Their fixed assets, they must have sold off. Did you guys sell off a bunch of fixed assets? I didn't look up here at the cash flow. Shame on me. Huh. Chester sold off a bunch of fixed assets. Did you guys sell off a bunch last round? Fixed assets? Okay. I just have to take a look because your depreciation is still relatively high, even though your fixed assets are quite a bit lower than these other teams. So I don't know. That's not an accumulated depreciation. That's just the depreciation for this last round. So it seems a little bit odd. Sales, anything else? Sometimes, last round like this, I mean, Digby here, just to give you guys an example, and still invested a lot of money in TQM. If you're playing for the last round, is that a good thing? Yeah, I could pencil that out and probably tell you that it probably didn't really help or hurt either one a whole heck of a lot. Okay, but that is a direct expense, right? When you're spending money like that, and so in terms of a one-round expense, it can be kind of meaningful, and obviously that took away, at least up here, that took away from its profit. The other parts of that, the contributions that it makes to your profit, are a little bit more hidden, right? The decrease in material costs, the decrease in labor costs, some of those things aren't as obvious, right? So it's a little bit tough to ferret out and really pencil that out and tell you exactly how it works. But you can get a pretty good idea sometimes if you sit and put a pencil to it. Baldwin spent a lot of money on TQM2, and Chester a decent amount. So again, we're still sitting at quite a bit of capacity. Baldwin, Chester, exceeding amounts of capacity. Digby even still a lot of capacity. Erie, they're using close to their full capacity, it looks like, because they got a capacity of about 3,500 and they produced about 6,000. So they had a little bit of excess capacity, but not too much. Okay. And Ferris still quite a bit of capacity, so a little bit surprising on the amount of capacity. I say that because sometimes that's a tactic that you can do in the last round, sell off capacity and get it down. Obviously, that's going to reduce your plant size and whatnot, and then do something with the cash because you're going to generate cash from that. But if you pay a dividend or do something like that, it can be a last round tactic. But you guys didn't necessarily employ those things. Inventories are pretty good. You want to have a little bit of inventory. You don't want to stock out, and some people did stock out here and there. We'll see what the potentials and actuals are, but the inventories are really pretty good. Overall as a class, that's pretty good. We see the plant utilization, which we kind of saw in the graph that was up above. You can see Team Andrews and Team Ferris. They're still introducing products. They didn't know it was the last round, right? And so they're kind of busy doing that and whatnot. Is that ART or ARF? I don't know. Quite a bit of money invested in automation, which is pretty cool. So traditional segment, the Ferris got out of the traditional segment. So Ferris, what did we say Ferris, was that the one I asked you, or was it Andrews I asked you what their strategy was? It was Andrews. So what's Team Ferris's strategy? They've gotten out of the traditional segment. They've probably gotten out of the low-end segment. Not quite, but they're getting there. Got to be a niche high-end then, right? Probably. If they don't have any products here in the traditional segment, that would be my guess. Low-end, Erie took advantage. Okay, so one of the reasons Erie did pretty well is that especially Chester, okay, gave up a ton of sales to Erie. Let Erie take advantage of that. Could have made a difference in the final scoring because that's fairly significant, right? We got 22% looks like their potential, and they sold, so they picked up 8 or 9% of 13 million, a little over $1 million in extra sales, right, or extra units that they sold. Is that 20 million in extra sales that at a contribution margin? Remember what their contribution margin was? About 52%, right? So $10 million in profits, huge. Okay, so you guys on Team Erie, look ahead, that team that's right in front of you, those guys are sitting right in front of you, that's Team Chester. Give them a big thank you, will you? So thanks, guys, because they just gave you guys a birthday present or a Christmas present, or what do we got St. Patrick's Day coming up, right? So a St. Patrick's Day present, yeah. Thanks, Team Chester, for the St. Patrick's Day gift.
And some beer.
Beer, yeah. Pretty good, yeah. High end, Digby dominating the high end with Ferris kind of there. Again, I'm guessing Ferris's strategy is more of a niche high end. Same thing, you got performance and you got size, I bet you. Yep, really competing there. Baldwin gave up a little bit in high end to Ferris, so Baldwin could have done a little bit better there, quite a bit better. They gave up 10% of the market share. It looks like they're in the size. Potential actual numbers there. We could look at those. Map, looks pretty good. These two, Digby was able to, even though they're not really well positioned, they were able to take advantage of the fact that there's not a lot of competition going on here, right? We saw up above, of course, that Team Ferris is dominating in those areas, but that's because they got products. They're right out here on the front edge where they need to be, competing really, really hard in terms of their differentiating for sure. Again, I would say it looks to me like they're a niche high end, right? Because they don't really have much going on down here. You don't see too much of the orange. There's one there that they took a little bit of sales in the low end, but that's kind of it. So, not a lot. That's kind of interesting. In the traditional segment, usually you get kind of bound up right here in the middle because that's kind of the dominant spot or the preferred spot. Not a lot going on there, right? Low end, interesting thing after 5 rounds, if you didn't do anything to your product, it still sold pretty well, right? But now it's starting to get towards the edge of that, And so at some point in time between rounds 5 and rounds 8, something might have to happen there. When, I don't know. Lots of money invested in the productivity. See some really good productivity numbers here, huge. Digby, 16% benefit there. Not so much for Erie. Okay. One thing about it, is it as big a deal for Erie? Yeah, maybe not, right? They've only got the 2 products. They're a lot smaller company. So it costs them similar amounts of money, although this is by employee up here, right? And so it's all relative there. Yeah, I don't know. Okay, I don't know. TQM would probably be a bigger question, I would say, in terms of that. If you've elected to go small, kind of like Erie has, you may not get relatively the same benefit, right, as you might for like a Team Digby investing a lot. Yeah, that would take some real penciling, and again, I don't know that we would have absolute perfect information, enough information that we could really pencil that out and determine what the relative advantages of that are depending on the size of your company, and if you've got 5 products, or competing in 5 segments versus competing in 2 segments. I don't know. That'd be really interesting. Okay, are there any questions about that other than, of course, who won? Which I will be happy to show you guys here in just a bit. But any questions about the round or what happened or why one team did better? All right. You want to see who won first, or you want to see your assignment first? Who won? You guys just don't like suspense at all. Man, I like the suspense. I like keeping you guys kind of in suspense. Okay, got them all on here. Sometimes it takes a while to get down there. Slow. So, earnings per share. We saw that up above. That was Team Erie. Followed closely by Team Digby. And again, our computer team is kind of in 3rd place there. So nothing real special. Team Andrews in 3rd. And Ferris quite a ways even behind Team Baldwin. ROE, we still got Team Erie. Number 1, contribution margin, obviously with that 52% contribution margin, they're leading the pack there. Digby not far behind on all of those. Digby's kind of taking a nice 2nd place. Stock price, Erie had a nice jump in the stock price, not surprisingly there, right? Profits, Erie was the best there. That was pretty close, though. Cash flow, Digby actually had the best cash flow. Strategy, no deductions there. So score, look at that Team Erie. If they have no deductions, 99.5 almost ran the table. Almost, not quite. Didn't quite get the cash flow, but almost ran the table. Did they have any deductions? Did you guys have any deductions, Jed or Whitney?
I don't know about a working capital.
Yeah, we'll see here. No emergency loan. We knew that. No deduction for leverage. And even if they had a deduction for working capital, it wouldn't matter. They still end up with a near perfect score of 99.5. So once again, thank that team that's sitting ahead of you, because without their assistance, you guys would not have done so well. But they really gave it up for you guys in the low end, wasn't it? Yeah. So, yeah. What did Erie do to jump so much from last round? Anybody see the one thing? I don't know if I'd point necessarily at one thing, but I think there was one thing that to me jumped out anyhow. So, did the rest of you guys see that? It's really good to know what your competitors are doing, so you kind of got an idea. it looks like they bumped up their price on each of their products by about $2 because they were pretty low in the round before. Okay, so $2 on every item basically that they sold. And how many did they sell between those two segments? It'll tell us right here, won't it? So 3,200 or 3.2 million plus 2.9 million. So what's that? 6.1, a little over 6.2 million times $2. Okay. Again, sometimes it's just those little things. There's 12 million bucks right there, right? $12 million, and that's, you know, that's all basically bottom line. That's before tax, obviously, but that's basically bottom line. So $12 million. Is that right? $2? Is that about what you guys did on those? Yeah. Yeah. You know, I think they made a few more, and they might have done a few other things in there that were really important. Obviously, the gift that Chester gave them was extremely important because that amounted to $10 million there in extra sales. Okay. But those little things, okay, little tactical things that you really got to pay attention to from round to round because they make all the difference. So, all right, assignment. Here we go. For round 5, we know, question number 1, we know paying a dividend is going to increase your ROE, right? Andrews ended up with a lot of cash at the end of the round. Andrews was also profitable. Could Andrews have paid a dividend of sufficient amount to have ended up with an ROE equal to Chester? Now, Andrews did pay a dividend. Okay, so they did pay a dividend. So the question is, could they have paid an even bigger dividend then? Okay, could they have paid an even bigger dividend in order to have an ROE that was equal to? I got Chester's in there. That's wrong. Yeah, yeah. I didn't mean to have Chester in there, so I'm sorry. Let's fix that while I'm here doing that. I think I meant Team Digby. Is Digby's 19.1? Yeah, that's what I meant. Was Digby's in? Oops. Okay. And if so, how much would that dividend have been? Okay. So what's the equation for ROE? Net income divided by equity, right? ROE equals net income divided by equity. So you know what the ROE is that you're shooting for. It's whatever Digby's was, right? Okay. And you know what your net income was. Okay. That's the net income that Team Andrews had. Okay, so what are you solving for? Yeah. So you got two legs of a three-legged stool. You just got to solve for that third leg, right? So it should be fairly basic algebra there. 2, what are the marginal variable costs of all the low-end products? Okay, so I want you to just go down the low-end products. Chester each has 2. God. I promise I wasn't drinking when I did this.
It's your story.
Yeah, I'm sticking to it. Okay, Chester has 2, and I'm talking about just those products that are classified on the low end on the production analysis, because there are products that get sold in the low end that are actually classified as a traditional product. They just might sell. But all I want is those products that are actually classified on the production analysis. Let me show you what I mean. Here's the production analysis. So the ones here that say primary segment, just those ones that are the low end there. So you got Acre, you got Bead, Chester has 2. They got both Cake and Cedar, Dell, Ebb, and Fast. Okay? And I want you to provide for me what the marginal, variable costs are for each one of those products. Okay? Then I want you to calculate for me in question 3, what's the marginal contribution margin for product CAT? Okay, I chose CAT in this case because it's really interesting what a difference it was between what its reported contribution margin is and what its marginal contribution margin. Marginal contribution margin. Yeah, that's almost like a redundancy. It's really stark with the differences, and so when you get that, you can look at their contribution margin that's reported, but calculate what the other one is. Okay, 4, Ebb had a lower material cost per unit than Bead. What are 2 things that contributed to that lower cost? Okay, so what affects material costs? You might have to dig out your guide. Okay, you might want to look at your guide and see what affects material costs. That's going to provide you the answer for that. Should. Okay, questions about the assignment? I'll be here for, shoot, you guys got all kinds of time to work on it here. So I will get it posted immediately here. How's that? So that you guys can dig it up and have a look at it and get going on it. So, okay, let me sign off here and I'll do that.